Hi, and welcome back. It is March 20th, 2025. Yesterday, YieldMax and Roundhill announced their distributions for their option premium pay-in ETFs, which generate a monthly or weekly income based on option premiums gained by doing a covered call-like strategy. And so for YieldMax, the Group A was announced. As you can see, we got SNOY at 81 cents, FIVI and FEET both right around 70 cents, Crash 64 cents, TSM 57, almost 58 cents. LFGY was solid at 47 cents. TSLY also came in right around 47 cents. YBIT 43 cents. Google 32, almost 33 cents. OARK 32 cents. RDTY, SDTY both also almost 32 cents. The QDTY was at 31 cents. Exxon was at almost 30 cents, GPTY 26 cents, and then our YMAX and YMAG were 15 and 8 cents respectively. Then ULT with its weekly payout was almost 10 cents. Taking those, and I won't cover Roundhill. Roundhill was a little bit higher than it has been recently. I've plugged these amounts into my spreadsheet just to get a look at them from a percentage basis, as well as to compare them to previous month or the previous week, depending on what their payout frequency is. You can see for these weekly ones, YMAX recovered to where it normally was. Last week at 10 cents was a bit low, at least from a historical trend. And then I guess the YMAG kind of reversed, and now it's a little lower than it has been. But you can see those are paying on a weekly basis 1.09 and 0.56% based just on last week. And then annualized, that's 56% or 28%, almost 29%. That's assuming that the weekly dividend experienced last week were to carry forward and be the same going forward, which we know that doesn't happen. So these are just estimates using the current data point as the basis. But I guess going on, LFGY, that one popped up a little bit from 42 cents up to 47 cents. So that's nice, at least from a weekly payout. The stock or the ETF is at $37.83, so that's a 1.25% payout for the week, or 65% annualized. And then we got a lot of these newer ones that are right around 31 or 32 cents, and GPTY 26 cents. So you can see each one of those kind of falls in this high 0.6% range. And then ULT 10 cents, just like last week, although with the ETF price at $6.53, 10 cents on a relative basis is 1.5% for the week, or almost 78% annualized. So although ULT has been a bad investment for those who've had it, at least from a NAV perspective, at $6.53, if you're a new investor, might be something to take a look at. And then going on to the monthly ones, or Group A here, we got TSLY, 46 cents, but based on a $7.75 stock price. Just make sure I got this calculation right, and I do not. Oops. So 46 cents, I guess I was using the previous month's amount. Let me just make sure these other calculations are correct. And let me just update those. Appears I seem to miss the update. But if we update the data to pull in the latest month's percentage, so we can see that taking the payouts rate for the month of 46 cents divided by 7.75%, we got almost 6% for TSLY. Crash, the inverse of TSLY, quite a bit higher, 8.48%. I'm assuming TSLY is doing credit spreads or something that they're selling, reducing the percentage they get, whereas on the short end they're not doing that. That's just my guess. But I would expect those percentages to be similar if they're employing similar strategies from selling their calls to generate premium. Google at $12.42 paid a 33-cent distribution. That comes at 2.64% for the month, or which is 30% annualized. A little lower there, but I guess I might take a look at that from a trend perspective later. And then YBIT, 44 cents. That's in the 4%. OARK was in 4%. XOMO, we always expect that one with the lower volatility to be a little bit lower, right around the 2% range. And you can see that fell exactly there, right around 2%. As I've always said, anything kind of in the 2 to 5% range, pretty standard. Stuff above 5%, I expect that on the higher volatility names. But yeah, anything above that is something that I guess I would be looking at. You can see that TSLY and Crash kind of fall in that bucket. And SNOY actually 81 cents, just over 5%. So SNOY will actually be one I'll be looking at further from a Tableau perspective, seeing how the ETF has performed since its inception date and giving you some visual metrics to use in assessing stock performance from a cumulative dividend perspective and a price performance on the actual ETF, and having those two metrics mash up against each other to see how they are performing overall. And then TSLY, we got 3%, almost 4%, and then FEET and FIVI right around 2%. I notice these ones are pretty low. I'm not entirely sure why. I don't know if commentary down here says anything. There's a lot of commentary about clearly NAV's been going down and the market sell-off lately. But with my visual later, I do want to show that even with NAV deterioration, these are not the worst investments, because the cumulative dividend actually becomes a substantial portion of your investment over time. And I think that visual will help somebody see that. Yeah, I don't know. I guess I'd have to take, looks like someone here thinks FEET should have been higher. I guess I'd have to do some more research, but FEET and FIVI seem a little low to me, at just under 2%. I know that these reinvest into the underlying equity. I think the hope there is not to experience the NAV erosion, because you are investing in the underlying equity. Therefore, if the stock or the equity shoots up significantly, you're not necessarily entirely capped on the upside. So therefore, the ETF will also improve its price with the equity, whereas some of these other single stock ETFs that don't invest in the equity, they are capped on the upside. So if there's a big improvement in the price of the underlying equity, the cap really limits your upside there. And then if there's a subsequent decrease, you can experience the full decrease without the benefit of experiencing any part of the increase, which can lead to some NAV destruction. So I think that was the thought behind some of those. And then for those who invest in Roundhill, you can see that they were all a little bit higher than they have been, especially the YBTC almost coming in at almost double what it has been on a weekly basis. So that came at 1.39% or 72% annualized. And these other ones are just probably slightly higher than I have seen them, coming in between 0.7 and 0.9% on a weekly basis. But yeah, with that said, the one I wanted to focus on today was SNOY. It's based on the underlying stock is Snowflake. And I don't know if you want to look at the price performance of Snowflake just as get a baseline for how this stock or the underlying stock's been performing. But to start off with, this had an inception date of the middle of last year. Let's see if I can find it. It's June 10th of 2024. So if you look at Snowflake here, we look at it maybe probably like a year out chart. So if we start in June, what did I say, June 10th? So you look at around June 10th, it was, I don't know if I can get it perfect, but it was right around high 120s a share. And it flatlined in the low hundreds, and then following its earnings in either late October or late November, it popped significantly up to the high hundreds, even getting close to 200. And then I think with the recent market sell-off, it's come back down to the 150 range. So the stock performance is probably up slightly. So just from looking at that, I guess keep that in mind. And then we'll compare this to how the YieldMax ETF had performed, so you can get a perception of how the underlying stock would have performed and kind of its price movement over the time, and compare it to the YieldMax strategies. So with that, I did this in Python, I wrote the code in Python and exported the illustration out to Tableau just to try to visualize it. So you can see here's my Snowflake or SNOY depiction. And basically I got, about 5 images, and I'll jump into each one of these. But so first, here's the distribution per share. Perhaps I'll open up the bigger, this is a dashboard so you can see everything. And then maybe I'll just go and edit. I was going to try to open up the single. So if I want to see the single distribution per share spreadsheet, I'll just click into that and then it'll take me here. So this shows me the distribution per share since inception date. It's had 3, 6, 9, 10 distributions. You can see overall they've been pretty consistent with the exception of one, which was $1.71 a share, very solid. That was around earnings, so that probably explains the overperformance there. But they've got close to one, with the lowest probably being about 50 cents. So I'd say they probably average around, if you look at the line here, probably 75, 80 cents per month. It's not a bad distribution rate, and it's pretty standard, as you can see here from the distribution history. And then on a comparison basis, or maybe first I'll go to this chart. This is the price of the underlying ETF, SNOY, plus the cumulative distribution. This is probably the best way I like to look at these, because it gives you an overall perspective of how your investment's doing. This assumes no reinvested dividends. This kind of just assumes you take the dividends and put them into a checking account and just keep track of the cumulative amount. But you can see in green here, we have the closing price of the SNOY ETF. And you can see it started probably right around 20, where most of these YieldMax ETFs started, at least some of the older ones. Recently, they've been starting them around 50 a share. They used to start them about 20 a share. And it currently is at 16.10 a share, so that's clearly declined. However, if you look at the purple, here's the cumulative distributions. So the last 10 distributions, each one stacked and added together. So it's been about $8.40 of cumulative dividends. So when you add those both together, you can see you're getting close to this 25 mark. So with a $20 investment, you're almost up to 25, which 5 divided by 20, almost a 25% return since the inception date in June of last year. One option you have when you get the distributions is you can obviously keep them in a checking account. You can reinvest them elsewhere, or one other option would be to reinvest them into the SNOY ETF. And right here, assuming somebody started with 100 shares, as they would have reinvested their dividends, with time you'd hopefully achieve a parabolic kind of curve here. But you can see if you would have started and taken the strategy, you'd currently be at 157.5 shares. So that's just some insight into what your share count would be currently, assuming you took that strategy and applied it going forward. And then finally compare. So this kind of does, here, let me see. I think I'm first going to start with this all variables. So this is just another way to visualize this. These are graphs I've already shown, but they're all in one. The green line here is the distributions that have been received since inception. The purple line is stacking these cumulative distributions, so adding all the distributions together and then plotting a point every month. And then I don't know if you want to call this turquoise or light blue, or this line here. This is the actual performance of the SNOY ETF over time. So it started at 20, was over 20, fell, then with that big November earnings release where they basically reported very good earnings, shot back up over 20, but then with the kind of the recent decline back down to 16. But if you take the purple line, add it to this blue line or turquoise line, then you get this yellow line, and this is basically your ETF price plus cumulative dividend, and that's the performance at least I would use in assessing the performance of this ETF. And then finally, as a comparison, like I said in a previous video, there's 3 scenarios that I like to compare. One is no reinvestment of dividends. So you can see that this is the blue line, and then reinvesting the dividends, which is the red line, and then finally just what would be the case if you just bought the underlying stock. So instead of investing in the SNOY, you just invested in the Snowflake, the underlying stock. Doesn't pay any dividends. It's basically just a hold and seek capital appreciation on an increase in share price. This one, surprisingly, which is different than the previous ones I did in Coinbase and MicroStrategy, or I guess it's Strategy now. But the lines kind of line up somewhat close together, so there really hasn't been an extreme outperformance from one of these strategies over the other. If you were to rank them right now, this one's kind of unique in the reinvested dividend strategy, basically taking your SNOY, taking the dividends and reinvesting them. back into SNOY. That one has performed the best, taking a $2,000 initial investment and turning it into $2,537. Second would be just investing in Snowflake. That would currently put you at $2,476. And then the last option would be not reinvesting your dividend, just keeping it in a checking account. That would put you at $2,450. Although that said, these are all very close together. One trading day could switch up the order of these pretty easily. But that just gives you some insight. And this one's only been open since June of last year. So with more time, I'd expect maybe some of these strategy options will separate from one another. But yeah, for the most part, I guess currently just reinvesting your dividends into SNOY was the best strategy you could take. I will take this link to these illustrations and put them in the description below in case anybody's interested in doing these. And then also what I've been working on is I've updated the code so that it should refresh on a daily basis. So if you want to come back to these as time progresses, all these charts will hopefully refresh automatically. We will see. But so therefore, someone with the link should be able to go back and a month from now or 2 months from now, be able to see all these visualizations and do with them as they see fit. That is all I have for today. Thanks for tuning in.